Welcome to the Tax Alpha Solutions podcast, hosted by Matt Chansey. Matt is a tax consultant, author, and certified financial planner with almost 2 decades helping his clients grow their net worth. On the show, Matt brings together an array of specialists to share with you their experience and success along with strategies of the 1%. Matt Chansey is with Coastal One, member FINRA SIPC. And now, here's your host, Matt Chansey.
All right. Well, good morning, everyone. Welcome to the podcast. Today is for Tax Alpha Solutions. Today's guest is Victor Bodie. Victor Bodie's experience covers acquisitions and divestitures, prospect development, and private placements. Prior to co-founding Transitus Capital, he served as vice president of the investment banking group at Esposito Securities, covering oil and gas, manufacturing, financial institutions. Additionally, Mr. Bodie served as vice president of Estrella Capital and land manager of Gadecki Energy. Mr. Bodie earned his MBA in Energy Finance from the SMU Cox School of Business and has a BS in Business Management from the University of Texas at Dallas and holds series licenses 63 and 79. Thanks so much for joining us today.
Good morning. Thanks for having me.
Absolutely. So, great resume. Sounds like you've done a lot of things in the industry. So let's start with, how did you end up where you're at today, and what are the reasons that you're with Transitus Capital? What led you here?
Yeah, I started my career in the upstream oil and gas space, working with Gadecki. It was a family-run business. We were doing direct investments in the oil and gas space. I jumped the kind of the fence, so to speak, when I realized that the part that I really liked about that business was the transactional side of it. And so instead of just making investments and managing those investments, what I ended up doing is concentrating more on the transactions. And so that led me to the investment banking side of things. And when we were at Esposito Securities, my partner and I that founded Transitus, we were at Esposito. We realized that we were concentrating on kind of larger transactions. We felt that the lower middle market was effectively neglected by the investment banking community. And so we set out to provide M&A advisory services to the lower middle market. And so we launched this practice in 2015, and it's been a lot of fun. And as a business owner myself, really can understand the shoes of my clients, understand what's going on there and the mindset. And we've had a lot of fun, and it's been challenging to grow our business, but it's been rewarding.
Nice. You made a statement there, and I find it to be a consistent theme amongst people that I speak with about the lower middle market being neglected. It feels like there's been kind of a migration of talent and strategy downstream, right? Back in the day, it was all concentrated at the top, but people are going, hey, there's some much smaller businesses that, albeit not small, it's a relative term, but much smaller than maybe some of the billion-dollar firms at the top, saying, hey, these people with, $10, $50 million businesses or whatever could really benefit from this level of talent, this level of expertise. And so I think that's a consistent theme with talent moving down market a little bit to serve those clients.
Yeah, absolutely. I mean, when we were at Esposito, we were going to market with these companies, and a lot of the private equity groups at the time wouldn't get out of bed for a transaction that was less than $50 million, wouldn't even look at it. And yet there were incredibly talented management teams, really great companies with really good customer bases, and that were just passed over. And since that, you've seen private equity go down market. So there's been a lot of appetite at the lower middle market. And at that, and when we launched our practice in 2015, we weren't the only people serving the lower middle market, but there weren't that many. Since then, we've seen more competition in our direct field, but more importantly, we've seen, as I said, we've seen capital going downstream and chasing really good operating companies and good management teams. I think it's somewhat cultural too, that people realize that they have a better work-life balance, that it's more rewarding in lower middle market, that you're not part of kind of a giant corporation. You're not just kind of a cog in there. So it's kind of a rewarding experience for business owners and such in the lower middle market. Kind of a little bit scrappier, but as I said, I think a lot more rewarding.
You can have some influence. You can move the needle.
Right. Yeah. Your day to day means something.
Yeah. Nice to feel like you're making an impact instead of just showing up and you're a number, right?
Exactly.
I agree with that. At all. So the past 5 years, you guys started this. Obviously, it looks like a lot of people's coming into the space, and I would agree. I think I've seen a lot more, higher end solutions kind of move down to the middle market over the past 5 or 6 years. I would say that has been a consistent theme. So when let's pretend that we were talking to a business owner today, that's in that middle market, that's maybe an ideal client. Let's give them a little bit of insight because I got to imagine the first time that somebody were to think about going through a process like this, it's got to be scary and a little bit unnerving, maybe to sell not everybody's a serial entrepreneur looking for an exit. Most people probably have built a business. It's kind of part of their identity. It's who they are. They've grown it for a series of time and they're going, hey, maybe I just can't do this forever, but I want it to live on after me, right? So how do I make that happen? So if I were a business owner or a fly on the wall in that room, what would that guy want to hear to help him understand, how a guy like you on the inside looking out views how you can help them and what the opportunities are?
Sure. Most of our clients are founders or second gen ownership of companies. So as you pointed out, they're not cycling through. So when they go to a transaction, when they're seeking an exit, this is typically the first time they've done it. It's a pretty grueling process from our perspective. What we try to do is mitigate that, the heavy lifting there. And so as people kind of look at a transaction and are contemplating an exit, it's not something that happens overnight. Business owners that have really built nice businesses, they don't tend to be kind of cavalier with such actions. And so advanced planning, I think, is, I'd say probably the most important thing. So if you're contemplating a transaction, start working on it in advance. I mean, anywhere from 1 year to 5 years down the road. And so as business owners start planning for, plan for a transaction, plan for an exit, I think that ahead of time, there are a couple of things they can do to build value. Because as a business owner, you have two types of income. You have your operating income, your day-to-day, and then you have your liquidity event income, the cash flow from a liquidity event. Obviously, different tax consequences, much more beneficial on liquidity event typically. But on an operating basis, so on your day-to-day, even though you're planning ahead for that liquidity event, there are things that you do on a daily basis that can build value. And that couple of things that really bring value at market are recurring revenue, whether that be contract-based revenue or customer retention, kind of low customer churn, concentrating on low customer churn, repeat customers, or contract-based recurring revenue. On the internal side, business owners and companies that have good financial controls really find higher value at market. So whether that be that goes beyond just the books, there just beyond the income statement, that's watching your metrics, your operating metrics, and kind of monitoring your business on a day-to-day basis. And also say having standard operating procedures. So not all the knowledge is in between the ears of the founder. And so you have a clear set of operating guidelines that your entire team operates under. And then, there's a lot of different components of value, but lastly, I'd say a management team that's poised to transition. So as I said, it's not a decision that happens overnight. People don't just wake up and get out of bed and decide to sell their business. And so if you have a management team that's ready for transition, when you go to market, it really shows a lot better with the prospective buyers.
Yeah, makes sense. Absolutely makes sense. I guess, I can imagine any small business owner, as you grow it, in your head, you're like, I understand how all this works and I understand the pieces and I understand the relationships. And you're like, this is my IP. Like, why? I don't want to tell and share everybody like how I've done what I do, but if you don't get it out of your head and you don't let other people know, it's not really a business, it's just you, right?
Right. That secret sauce needs to be written down at one point. And it's funny. And I mean, in that exercise, I've seen business owners really start to take a step back and look at their companies and look at what they're doing when they start kind of detailing the standard operating procedures. They see flaws in what they're doing and they see opportunities for growth when they start really looking at their operating procedures and their metrics. As I said, it builds value at exit, but by operating on a day-to-day basis to build value in your company, you in effect increase the operating cash flow, the operating income.
Sure. I mean, there's two ways to increase cash flow, right? Increase sales or efficiency, and decrease cost on the other side, right? So, and many times I find business owners are focused on top line revenue growth. They're not normally the best on efficiencies from an operational standpoint, right?
Right. And I mean, that's brings up that adage of work smarter, not harder. And so by if you have expanded margins, that means for every dollar coming in at the top, you get to take home more. So
yeah. Agreed with that. So great feedback. Love that. How we look at operating income in the business, and then we look at how, it's our liquidity income after we potentially sell the business. So what are some of the, the obstacles and challenges when you're sitting down with a business owner? Does the conversation of, and this is just intellectual curiosity, does the conversation come of, hey, if I sell my business, will I be able to maintain the same type of lifestyle that I had when I was in the business? Will I be able to have the same type of income? Does those conversations factor into the area of it where you're planning?
Almost every single conversation that question.
Really? Okay.
Yeah, I mean, I think that and what am I going to do? And so if you plan for retirement and plan ahead, as I said, the whole kind of premise here is plan ahead and make these decisions early, and therefore your retirement income will look all right.
Sure.
Yeah, I mean, if a business owner has a salary that they've been taking home, and then all of a sudden they sell their business, yeah, they have a windfall, if you will. There's a liquidity event through proper planning and working through that with a financial professional that, yeah, they're able to kind of maintain a life, maintain income, and it's just it's a different source. And then, as I said, the other question is, what am I going to do all day? And we do see a lot of business owners remain on with the company and continue to work there. So therefore, if you're continuing to work at the company, you've got, I guess, effectively your cake and eat it too. You add your liquidity event, and then you have your salary, of course, by working for the new owner or financial partner. So yeah, but planning ahead is key when looking at kind of a post-transaction life and post-transaction income, for sure.
Sure. Well, you can only fish and golf so much, right?
I've not seen the limit, but yes, that's what they say. I haven't reached the limit there.
I know some people that try to push the limit, but at the same time. So from somebody staying on and continuing to have a salary, kind of an earnout, are you seeing that happen for reasons that are so like I can think of reasons off the top of my head. The owner wants to stay. The transition of the new business wants them to stay to make sure there's some continuity in the transition. They need or want the income from continuing to be able to do it. It kind of fulfills their plan, or even capital stack issues, right, through the transition. Like, what are some of the primary drivers of that about how somebody would make a decision if they want to stick and they stay from your perspective?
Yeah, so a buyer that wants management to stay on for a certain amount of time. Traditionally, there's a minimum amount of time, just for some, as you pointed out, that with all the secrets being in their head, they want to make sure that they're understanding the business. But it really brings a lot more value when a business owner wants to stay on, because you're putting your money where your mouth is. You're saying, okay, look, I believe in this business so much that I'm gonna stick around and maybe retain some of the equity in the company and continue to operate that. And they've just taken some chips off the table. But yeah, it really brings a lot more value at market when management wants to stay on, or the seller wants to stay on a little bit, because typically our buyers are private equity groups. They may not have an operator that they want to place in there. And so by looking at a business as an organization, as an organism, management is essential, and it is to the continued success. So yeah, it's funny. Also, we see a lot of founders, a lot of business owners enjoy their roles more than they did initially, or more than they did prior to a transaction. So when they bring on a financial partner, they sell a majority of the company. Now they're back to doing the things that they loved, the reasons that they founded the business, and they don't have to take care of all the stuff they didn't like. So, more like going to the batting cages instead of running bases. They just said, I just like doing this part of it. And so now they've got support, both financial and from a management support as well with a buyer. And so, yeah, absolutely. People kind of find that they enjoy the role more than they did prior to the transaction.
Sure. It makes a lot of sense. I think the terms CEO and president get thrown around a lot, and I don't think a lot of people really understand maybe some of the definitions that are supposed to be applicable there. Whereas the way I was taught in school was, the CEO is kind of the person that looks externally for strategic vision of where this is going, what we're doing, and how we're growing it. And the president is someone who kind of looks internally from an operational standpoint. How are we managing and growing the business? And I think those business owners, early on in their career, were that strategic visionary, like, hey, where do we go? What do we do? Where's the opportunity? And later they transition more into that kind of president. I got to run this thing. I got to make it happen. I got to keep operations flowing. And that's kind of what grinds them down. So being de-risked from that cash out transaction and now retained almost lets them go, hey, like, I get to be this thought leader again, kind of what I'm doing and how I thought this baby would grow.
Right. You get away from being head bottle washer. And that happens so often that you set out to do these things and to grow this business, but you have to keep the machine running. And so by bringing on a financial partner, or whether that be a full acquisition or a partial acquisition, that you can go back and as you said, be a thought leader and think about the things that why kind of brings you back to day one. I started this business to do this. Well, now you can go do that again. You don't have to keep the plate spinning. And so really, it's a fun part of our business to see that fire reignited with business owners as they contemplate a transaction.
Sure, absolutely. Yeah, because the grind wears everybody out, right?
Sure does.
The grind wears everybody out. So I wanted to double back a little bit. You mentioned some things and I've taken some notes. So, when you're going through a transition process or an exit for a business owner, many people in their life have other professional advisors and maybe a financial advisor type person, which you mentioned a little bit, but they probably also have attorneys and CPAs that have been involved in their life as they've grown and operated the business. Now, those professional advisors may not have the appropriate skill set for a transition. That may be another set of attorneys and CPAs that potentially get involved. But how coordinated is your process with bringing in the existing advisors that have been in their life, maybe suggesting new ones, and making sure that all those people play nicely together in the sandbox, right?
Yes, that's a big component of our job. And so we tend to kind of quarterback that newly assembled team. And as you pointed out, that those are advisors that have worked with the business owner leading up to a transaction. And that usually is corporate attorneys, CFO, controller, CPA. And then from a legal perspective, we don't have a particular law firm that we work with, but we have a short list of groups that we recommend. So we bring in legal counsel to handle the transaction, and that's specialized attorneys. On CPAs, we absolutely bring in somebody that understands the kind of consequences and the impact on a seller's personal financial statements as well as the companies. And so, yeah, we do absolutely bring in specialized groups, and we quarterback that new, or I wouldn't say old and new, but kind of existing and potentially temporary advisors. So yeah, we tend to quarterback all those, and that way, when a business owner is going through a transaction, they're able to continue to operate their business. They don't have to talk to 7 different people every single day. That's what we do.
Sure, helps with some efficiencies. How often do you get friction from kind of the team going out, the old incumbents that might have? Sometimes I find that those people are in the deal because of the trust and the relationship, not because of the technical expertise or the value that they're bringing to the table. It's just they've been a trusted advisor to the business owner for so long. He's like, I'm not going through this without these people.
Sure, and there's something to be said for that. They do have their kind of built-in team, and they're a close team. We don't typically see too much friction, especially from the groups that we like to bring in, that we work with pretty often. We've worked with them in the past. Personalities are so important,
Sure.
And so we find people that understand there to do a job and not let their egos get hurt, and everybody works well together. And when it does, when there is friction, it lands on my shoulders. So that's how I handle it.
Understood. Well, let's talk about that. You said that, personalities matter a lot. And on our pre-call, we talked a little bit about, cultural fit. How do you evaluate cultural fit? Do you have a diagnostic process for it? Is it you've done this and you've talked to certain business owners for a while, you kind of have a really good understanding? Like, are there some red flags when it comes to culture that just pop up and you're like, yeah, we know that's not going to work, right? So how do you guys address culture in the transition?
Yeah, so we first spend a lot of time talking to clients, getting to know them, getting to know their business on a cultural level. Of course, they send over the income statement, and that's very black and white. So we get an understanding of what the business is like internally, and also what the business owner's objectives are. And so what do they want to do? Do they want to continue on, grow the business? Do they want to work for a year, transition out? Do they place a lot of value on their employees and are willing to cut value to make sure that their employees all remain intact? So we really get to know the business owner and what their objectives are. And then based on that, we find the right buyer for that, because there's countless number of private equity investors and strategic buyers, and they're not all the same. Not all money is equal, as we say around here. And so we find the right party for the transaction. We do go pretty broad in the market, so we make sure to market the opportunity to a lot of different investors, and whittle that down to a short list, and make sure that we're finding somebody that is a good buyer to make sure that we get the transaction done,
Sure.
to get it across the line. But a buyer that is going to make the long run, especially if there's going to be a persisting relationship. And so the culture of the private equity groups, or the investor or the buyer, meshes with the culture of the company.
There you go. So you bring up an interesting topic, because most people, I think, through an exit would say, hey, I maybe want to go for the biggest price, right? And you're saying all money is not created equal. And I say sometimes, hey, money has strings attached to it. Sometimes it might not be worth it, right? So give us an example, maybe, or talk about why more is not necessarily better when you're looking at it through the lens of a cultural fit. Because I can imagine almost everybody's like, well, this guy's offered me 4, these people offered me 4, but your experience tells you why that might not work, or the juice might not be worth the squeeze per se, right?
That's a really good point. This is kind of a silly thing for a guy like me to brag about, but we rarely take the highest bid. And so if I'm going to a business owner and say, yeah, I'm going to help you sell your company, by the way, I probably won't take the highest bid, it really seems like a dumb thing to brag about. But I think it points to our firm's ability to find the right buyer. So when we see these kind of outsized bids that are really an outlier, Usually they don't pass the smell test. So we don't just look at the numbers and say, great. We go and look at the buyer that's writing that offer. And okay, do they have the capital, or are they writing a check and then they're going to go try to find the money on the back end? So do they actually have the capital? Do they have the management horsepower and the transactional horsepower to get the deal across the line? Are they actually going to close? You see groups sometimes just pitch offers out there, and by the time it gets to close, that offer has been trimmed down by 25%. And that's typically our biggest fear, is that we would go with a party and say, oh, you're going to be the buyer on the deal. And that process takes a while. And so to walk down the aisle, and by the time you get down the aisle, they've whittled down and said, oh, well, we've kind of retraded and we found things that we don't like. And they whittled down the deal, or they just don't get the deal done. So we find buyers that get deals done and will stand behind the things that they've written.
Sure. Great answer, by the way, because I don't think a lot of business owners understand that sometimes. And that's scary, but I find it analogous to, like, hey, I've got a car that I want to trade in. You call the dealership, what do I get for this year, this make, this model? And they throw a number and you drive it to the lot. And then the guy walks around and he goes, well, I've seen ones that are a little better condition than this. There's a couple scuffs on it there. By the time you're done, it's so much, they've retraded the whole deal from you, but now you're there and you're stuck, and you're probably not going to drive somewhere else. And right.
Yeah. And it's too late. Yeah. I mean, exactly. You've driven there, title in hand and everything, and now it's got too late. And that's our primary concern in finding the right buyers. Make sure we actually get this thing across the line, and that it is a good relationship on the backside of the transaction.
Yeah, I don't think all business owners realize that sometimes people will throw out just the highest possible price to, number one, attract attention, and number two, scare everybody else off of the deal. And then when nobody else is looking at it, they're like, well, nobody wants you now.
Oh yeah, everybody's gone away. They've gone and bought other companies, and
we're the only guy here with money now. Now you got to kind of give in our terms because we're the only one standing here, right?
We're very wary of that.
Yeah, makes a lot of sense. Totally understood. So, in our pre-call, we talked a little bit about how you guys meet some of the business owners that you get involved with, right, through your process. And I think you mentioned that you guys are part of the EO organization. You want to talk a little bit about that?
Sure. Yeah, it's the Entrepreneurs Organization. And so we're strategic sponsors of our local chapter. And so we spend a lot of time with business owners and really just talking shop. We go in there and we're a resource. So they come in and ask us questions like, oh, well, I'm thinking about doing this. What would be the impact? What do you think about this? We're kind of the back office number nerds for us to calculate. So, okay, this is what I think about it. And it's a fantastic organization. I don't know how much you know about it, but we've really enjoyed that relationship, and very wide variety of business owners, but personalities, business types. And so we spend a lot of time just talking shop with those groups and trying to support them the best we can. And I've enjoyed that relationship a lot.
Sure. I'm very familiar with EO. I've been a panelist for ACG before for some of their regional events. I think they're close-ish, with business owners aggregating in a spot to, hear people talk about kind of, where we should go, what we should do, what the opportunities and obstacles might be, right?
Yeah, I'm an ACG member, spend a lot of time with that group as well. And so
sure.
It's a good organization.
So when you're looking for an exit for somebody, on our pre-call, we talked about the fact that you see a couple of different channels potentially for those exits right now in today's marketplace, right? I think number one, you listed potentially strategics, and number two, you talked about the PEG groups. Kind of dive into that a little bit and talk about how you might see one critical path for one business over another, and specifically maybe how frothy the private equity market is today, and where they're coming at, what they're doing,
Yeah, sure. I mean, it's been kind of a wild ride across the last decade, and watching the private equity groups grow, both in number and dry powder. So, so when we're talking to business owners, and as I said, we try to understand their objectives and what they want. And we go out to market. So we're going to package up the whole deal and go to market. And we bring that to both strategics, so potential competitors or somebody that would make sense as an acquirer. And we also go to private equity groups, and those private equity groups that we market the deal to, that could be somebody that's looking to make an investment in that space. If it's business services or maintenance, facility maintenance groups, right? So a lot of private equity groups say, okay, we want to make an investment in facilities maintenance groups. So they might have an investment already and they'll see it as a bolt-on, or they might say this will be our first one and we're going to grow it from there. And so we go to both private equity and strategic. The valuations have increased tremendously. I remember, let's say, I don't know, 12, 15 years ago, it was, well, how much is this business worth? And it was always, 5 times EBITDA. You didn't have to think about it. You didn't have to know much about it. That was kind of the magic number. And nowadays, that would be a kind of a paltry sum for some businesses. And there's an immense amount of dry powder out there. There are a huge number of private equity groups that are chasing deals, and so it's driven valuations a lot higher than they once were. And that's been consistent across, the last 5 years. I kept thinking, well, this might be the top. I mean, this is, they got to come down, and they haven't skyrocketed across the last couple of years, but they've been consistent. We've been very high valuations. It's been a great time for business owners in the lower middle market to find an exit or find a strategic partner there as well.
Sure. So clearly it's a great time to be on the sell side, right? It's a great time for an exit.
It is.
Are we in a bubble?
Well, as I said, I've been saying, well, surely it's got to change. And I've been saying that for a number of years. I think that if we do trim valuations, I don't think it doesn't necessarily have the volatility that the public markets do. So I don't think you're going to see valuations plummet overnight. We did trim some valuation, kind of multiples. I still think it would be a nice time to sell. I mean,
right. Because I guess the real question is can a buyer grow a business from today, where it is today with what they're buying at, right? Can they grow it? Can it get bigger and more capital efficient from where it is today? And that's a function of economics, right?
Right. And that's the function of the buyer's management team. So, sure. and that's kind of what we were talking about before that. Okay, if my client is going to roll over some equity and retain some equity there, we find the buyer that's going to be able to execute that growth plan there. And so we spend time talking to the buyers, say, okay, tell me what your track record is in this space. And, what would you do with this business? How would you grow it? And, the answer is not necessarily just work harder and sell more. Sometimes people have really well thought out growth plans. And so, I think that there is room for expansion. I think that room for expansion comes at the exit of groups that weren't so strong. It's kind of survival of the fittest at times. And that will always be the rule of the jungle.
Sure. There's always somebody with a better idea or a new idea. And if they have the ability in the team to be able to execute on that new idea, then hey, right. But it's ideas are a dime a dozen, it comes down to the execution. Can you make it happen? Right.
Exactly. Or are you nimble enough to see somebody else's idea and react to what the market's doing? And
that's right.
Nimble management team is key.
That's right. I tell people all the time, I'm like, when you think back 100 years and you look at the biggest businesses in the S&P 500, had the most capital, the biggest brand, the best access to talent and everything else. I think it's less than 20% of them survive over a 100-year period. It's because they've lost the ability to be nimble and pivot, right? And you look at things like Kodak and Polaroid and other instances. So if you think it can't happen it happens to the biggest businesses. If it can't happen to small businesses, you're kidding yourself, right?
Yeah, if you look back 20 years, the roster on the Dow was a substantially different roster than it is today.
Yeah. And a lot of the biggest companies today are just growing through strategic acquisition. It's not organic or internal growth. It's roll-ups and other opportunities that they see that are accretive.
right? Because you kind of, when those groups are making acquisitions, they've kind of de-risked investment to a certain component.
Sure. Totally makes sense. Good stuff. Well, hey, I appreciate what you shared today. And Victor, we've covered a lot. Is there any final thoughts, anything you want to close with, anything that I didn't think to ask that's relevant to you, your firm, or to somebody that's a buyer or seller in this space?
Nothing off the top of my head, but we're always here to answer questions. So, I mean, I think that, as I mentioned in the beginning, that if business owners are considering selling, it's critical to think of it in advance. And so we're happy to always walk through what that looks like and provide valuations. We discuss with business owners, we give kind of our estimate of market value. Mm-hmm. And that's, we don't send invoices after that. And so we always happy to answer questions and what the market looks like.
Sounds good. Well, tell people how to find you.
Well, you can reach out. We're Transitus Capital and transituscapital.com. My name is Victor Blody. My email is right there on the website. Love to answer any questions.
Sounds good. Well, Victor, I appreciate you. Thanks for taking the time today and the great conversation. And thanks so much for being a guest. We appreciate you.
Thanks a lot. Enjoyed being here.
Absolutely.
Thank you for listening to another episode of Tax Alpha Solutions, brought to you by Matt Chancey. We hope you enjoyed listening to this week's guests and insight. If you liked what you heard, please consider subscribing wherever you listen to podcasts.